Alright, what's up guys? So, sorry if my computer's laggy a bit, I'm downloading a freaking game, don't worry about it. I just wanted to revisit the strategy I talked about in my last video that's kind of gaining a little bit of traction, more than I expected, which I greatly appreciate. But let's talk about the breakout of the 925 candle, which was the variant of the breakout of the 930 candle, which usually has lower risk, higher reward, but also probably a little bit lower probability. But as you can see today, unsurprisingly, tech stocks seem to be going up. We'll see if that's true, fully true or not, as the day plays out. But this trade, you would have you'd probably already be out, right? It's already given over an 8 risk to reward. So, I mean, depending on like your position size and stuff, this exact strategy that I just described, if you tried it out today, it would have worked great. And you could still have a partial on right now, depending on how many contracts you entered. Or, I mean, I don't know if you're trading NAS 100 like on a Forex broker and you'd have lots or whatever. I don't really trade Forex and stuff like that. But I imagine this strategy doesn't work as good on Forex because Forex currencies don't have as much of a bias. But anyway, as you can see, this is working out pretty well, and yeah, that's all I wanted to say. Seems like a pretty decent strategy to me. I mean, what do you guys think? Maybe I'll point out one other thing which I've noticed, which is that sometimes a good breakout to buy would also be to see if it lines up there. You'll notice that like often there's right before the 930 candle, it creates this high and then makes a little dip, like a little U, right? Like a little bull flag, actually, if you really think about it. It makes this little bull flag or whatever you want to call it, and then as soon as it punches through this high from before the little dip, it just rips. I've seen that happen quite a lot. I don't know if you've seen that, let me know. But I've noticed that happen a lot in price action, that before a big rip, it will create this little high and then do a little dip and then just rip from there, right? And as you can see, futures are still ripping. Unsurprisingly, I'm actually correctly predicting the direction or the bias that the market has, and I explained in all my videos. Go watch all my videos. You'll see the step-by-step, the pieces that I put together in order to get this bias. Look, and the short of it is that bears are getting screwed. The retail Wall Street bets, puts buyers and stuff like that are getting their face ripped off, and people selling calls. And then on top of that, also it's that Wall Street is trying to run these prices of like the top NASDAQ stocks up as quickly as they can before other people pile into the bull market, right? They just rinse and repeat the same strategy every time it's a new bull market after a recession, right? It unexpectedly just starts ripping back up really quickly, and the news keeps spreading fear while prices rip up, and everyone's going to be uneasy. Like for example, I can just remember psychologically what I experienced in 2020 when I really started trading. I kind of started trading in 2019, but like on and off. I've on and off learned how to trade since 2016. Tried to get more serious in 2019, took a break, tried to get more serious in 2020. Took a break, tried to get more serious in 2021, took a break, and then finally got serious at the beginning of 2022, and I've just been actually committed to it fully since then. But anyway, if I can remember my psychology from 2020 is that with COVID, you expect the market to keep crashing, and then it rips out of it, and you're like, wow, it's doing so well. But every time you're hesitant to get back in because there may be a pullback in the market or something that lasts long enough to make you uncertain, and you're just not sure. You're like part of you wants to FOMO in, but part of you is like, well, it's already gone so much up, like I'm afraid to ride the move. And then by the time you actually get in, it's usually near the end of a bull market, right? Like over here, you're like, oh, fine, this just won't stop going up. I'm finally getting in, and then there's a recession. You get knocked out, rinse and repeat, right? It's a total psychological thing. It's not about like psychology, like the people who promote trading strategies are like, it's all psychology, but it's psychology in the sense that the market is a representation of psychological warfare that the institutions are engaging in against retail in order to make money in a zero-sum game, right? So yeah, anyway, kind of a tangent, but whatever. Take care, guys. Again, keep looking for higher prices. Don't assume that any one day or any one week will be green, but understand that in the long run, betting on a long with a long bias on this market is the much smarter and safer bet to do, right? So, yep. See you guys soon. Thanks for watching.